Time for the market report. Looks like a slight turnaround.
Very slight. Some commodities making gains while others still on the downside. We'll talk about it. But first, the numbers. What were the week's biggest gains and losses? And then, more reports from the USDA. What can they tell us? And finally, a deeper dive into row crops. An expert tells us what's moving the markets. So, markets closed split, livestock up while row crops still trending down. Let's take a look. The week's biggest gain, lumber up 26 bucks, nearly a 5% increase from the previous week. The week's biggest loss, soybeans, down 11 3/4 cents. That's more than a 1% decrease from the previous week. Several USDA reports dropped last week, giving info on the current U.S. livestock situation. In short, we're seeing a decline in slaughter this year. Doesn't mean we're running out of meat, but it does mean there's less going onto the market. Here's what they said. In the quarterly hogs and pigs report, inventory down 1% compared to September 1st, 2024, but up 1% from June earlier this year. Breeding inventory down 2% from last year and slightly down from June. Market hog inventory also down 1% from last year, but up 1% from June. The June through August pig crop down 3% altogether compared to last year. In the livestock slaughter report, overall commercial meat production in the United States down 10% compared to last year. Of that, beef production down 12% and cattle slaughter down 14%. Veal production 38% lower, pork production down 8%, and slaughter down 7%. And lamb and mutton production down 5%. In the poultry slaughter report, the ready-to-cook weight, also called certified wholesome, down 1% compared to last year. Preliminary total live weight during August this year also down 1% compared to the last. Of those, young chickens down 1%, mature chickens down 5%, turkey down 7%, and ducks up 11%. In our row report this week, we hear from a market analyst about our major grain crops, wheat, corn, and soybeans. Prices falling on all three, and it seems there's a global reason behind it as well as general harvest pressure.
But I think the bottom line is, we bounced a little bit when the Russia-Ukraine rhetoric on the war popped up again. Remember, we shot up big when Russia invaded Ukraine. So I think a little bit of war premium in. But I think the wheat actually drug the corn market down. But Russia continues to sell wheat aggressively for money for the war. The EU crop is bigger. Australia's crop is coming at us. Argentina's crop's coming at us, all bigger. So that I think we're looking to North America to see if we have the weather problem in the spring. Yeah, fundamentally it's negative, but I think you reach a level where you're at fair market value, and I think that's what the wheat market is. While it can't really go down a lot, hasn't really for a few months, but when you rally, the end users aren't spooked, get up there, but the funds are short about 90,000 wheat, and so I think that's a little bit scary if they ever come out of those shorts, but they need to be spooked by something. Our neighbor is the one that's bought about a third of our exports on corn, so big exports, but it's from our neighbor. Argentina's selling corn. We've got a lot of competition, so I think the biggest supportive thing on the corn market is the fact that the producer shed the old crop supplies, but at this price level really doesn't work for a lot of people, and no interest in selling corn at harvest at these prices. That's what we're seeing. Well, I tell you, we might be very similar to last year. Remember, we put our biggest yield in August. Doesn't that sound similar? That's what we've done so far this year. And then what happened is the yield constantly got lower until we hit the January report. It looks like, so far from what we're picking up across the gut side of the Corn Belt, the corn yield just isn't there. In fact, it's down like 10, 30 bushels versus a year ago. So look for that to ratchet down. Carryouts probably go down. We've got the stocks and all position report next Tuesday, so the government's going to tell us what do we have for stocks in the U.S. So, it looks like that one usually isn't a big mover, but if anything, it maybe could be a little bit bigger on corn, a little bit smaller on soybeans. Don't look for that to be a market mover. I think it's really what is the real yield coming off the combine. Test weights are poor, so that's one. We do have big carries in the corn market, which is to the producer advantage. Here's what happened. The beginning of the week, Monday, Argentina took the tax off of their corn, soybeans, 24% on corn, 26% on beans. That made Argentina's farmer soybeans $3 higher a bushel, corn 50 cents a bushel. They sold it. The world market pressed lower on soybeans, and China bought like 150 million bushels of soybeans from Argentina. So I think the bottom line is, when you look at that, we had a lot of negative news this week. Soybeans didn't go down. I always say it's more important how do you react to the news than the news. Well, remember, we probably have lost. China, our biggest buyer, bought 54% of our exports last year, 800 and some million bushels. They bought 0 so far this year. Usually they bought like 400 million bushels by now, so ask yourself, how much did we lose? But if you look at it in the world perspective, I think you're shuffling some of these around. We lost big to China, but I think we'll pick up others' soybean demand. But is it enough? That's the question, because something in the world, it's a world market, and that's what we're looking at.
And that's it for a deeper look into the markets. Looks like although harvest season going pretty well so far, we're dealing with international competition on prices.